All right, today we had a really good day in the market. Today was an overall bump up. So, for those not paying attention, it's okay. That's what I'm here for. We had a jump of 2,000 points in the market today, which I kind of got the sense was coming. Last night I was just looking at the news and there was a little bit of change in rhetoric. So, they were talking about potentially, oh, that's my mom. Call her back. Um, Potentially, that's kind of rude, isn't it? But I'll call her back. But yeah, there was a change in rhetoric. There were just people were starting to really consider the balance between shutting down everything, shutting down the economy, and you know having that ridiculous or extreme of a measure versus allowing people to go back to work in order to help the economy. So there's a sense of like you have a choice: you can kill the economy or you can kill people, or let people die. You're not killing them. It's not the Hunger Games. Um, and so they're starting to realize it's like sometimes, and they even mentioned this yesterday, sometimes the cure is worse than the disease. And so I started to realize, like, if people start to think that there's a possibility in the short term of people going back to work in mass, then you're going to start to see things, move up in the market. At the same time, there's talk about the third level of stimulus, although that's kind of getting stuck in politics right now. But I get a sense from rhetoric that a big day was coming, and sure enough, it was 2,000 points, which on a percentage basis was 11%. So today we had a gain of about 1,600, roughly $1,600, which is, if you look at the total of these two numbers, about 14%. So even on a great day like today from the market, where a lot of people are thinking is a good day, we still are outperforming that. So I want to walk through a couple things that I was looking at today. Specifically, the one thing that nobody's really talking about, unless you're a total finance wonk, which I am a little bit, is the commercial financing market. So basically, when you look at, I'll give you an example. When you look at the way mortgages are set up, you'll have a bank that basically will give out a mortgage. In essence, what they're doing is they're paying a lender, or they're paying the homeowner, and they're wiring it, hundreds of thousands of dollars out of their account. But they don't just keep that debt. What they do is they sell that on the market and sell it to somebody else for a fee, and then the other people kind of package it up. They have a certain amount that they are, paying out on their interest, and they have a certain amount that they're earning on from their mortgage on the income side of it. So you have basically a spread. So it's their borrowing costs. They borrow, let's say let's call it $500,000 at 3%. And then the mortgages they have come in are at 4%. So they have a 1% spread, and they pay those out as dividends to the stockholders. So these are really meant as income generating stocks, but they require, one of the requirements in order for them to be able to do that is they need to have those mortgages being paid every month. But when people are out of work and banks are talking about, the overly simplistic message is, oh, okay, well, just don't, give people 3 months with no mortgage payments. And it sounds great from a consumer standpoint, but if you're holding one of these REITs, which is a real estate investment trust, and you're not getting any income, then it becomes a major problem. And then what's happening right now is they're under pressure to they're under pressure to pay back borrowing costs, which are called margin calls, and they're having to suspend the dividends, which is really most of the point to having the stock to begin with. And we're starting to see that market collapse faster than I thought it would be. So I'm going to walk you through a couple stocks that I think are on two different sides of this, and that I'm looking at. One of them I mentioned yesterday, and one of them I did not. I don't believe I did. So the one I mentioned yesterday was this one. I called it the scariest stock name ever. And what happened is this one is down in the last 3 months. This one is down 98.5%. And what happened is you start to think, okay, that's going to be a really good deal. I was looking at a little bit deeper, and they're actually, eTrax is a unit of UBS, and they actually issued this security Well, they actually recalled it. What it means is once it goes below a certain point and it's under $5 for a certain number of days, then what they do is they'll say, okay, for the next 5 days, whatever the average price of the stock is, that's what your indicative value is. And they'll just redeem it for that amount. So basically, you're getting screwed. These people are getting almost no money. They're getting 22 cents per share. So this one is literally being recalled. It will not be a security in a matter of a couple days. So this is an example of why I am like staying, for the most part, I am scared to death of the REITs right now, because some of them very well may not be here in a while. In fact, quite a number of them may not, unless they're given favorable terms on the back end from their banks and from the people that they're lending against. But unless they're having that pressure relieved on their end, it's not going to help on the other end. So this one's off the table. One that I am looking at potentially, but still with it, 10-foot pole length, is this one called Two Harbors Investment. They really don't have a whole lot of debt. They're well capitalized, and they've been around for about 11 years. So overall, it looks pretty good. 3 months out, let's pick that chart so we can pick the date we're looking for. We'll go back to what I call Death Day, February 20th, when everything changed. It was almost at 16. Now it's at 3. It's a little over 5 to 5.5 times return if it comes back to normal. But I'm not touching REITs for right now. I need to get clarity on where that sector is going. And that's what a REIT is right there. All right, a couple things I'm looking for right now. A few of the stocks that I was kind of perusing today. Southerly Hotels. Again, this is their preferred stock. The reason I picked this, they have a regular stock, but the difference in the amount of the percentage drop on the regular stock is less than the preferred stock. So I'm really looking at this one. It was at about 26, now it's about 5. And they basically do, hotels. So, but at the same time, they are a real estate investment trust. So, but they mainly work in hotels, which is a different market than like residential home loans. They own Hilton, Crown Plaza, DoubleTree, and Sheraton. So they're not going anywhere. So I'm definitely keeping a look at this. And then let me see, let's see if I put a limit order in on this. Nope, I'm still waiting on this one. I like it. I'm looking at it every day, but it's not enough where I'm going to put a limit order in yet. I really want to see the price maybe get down. I think I had a limit order on this before. It was, what was this? I had one. Oh, not on the preferred stock. Yeah, let's take a look. Did I have one on the regular stock? Nope, probably not. All right, still looking at it. I may put a limit order if it gets down to like 3, but we're holding off. I mean, if you look in 3, basically in the last month, they've lost 80%. So I'm definitely, this is one of my prime ones that I'm looking at if I buy a next stock. Groupon, only reason I'm including this is when I signed up for Robinhood and they say you get a free stock. This was my free stock, and I got it at like $3.60 a share. It's at 80, but I didn't pay anything for it. So woohoo, free 80 cents for me. But back on February 20th, this was Death Day, as you can see right here. I'm not sure why they took the biggest hit. It was about $3. It's now 80 cents. So who knows? It's one that might be a flyer. The thing about them is this works in, obviously Groupon is one where they basically get people to go out and do things. So when everybody's locked up, it's just going to be hammered right now. It is worth taking a flyer on it if it gets back up to, let's say, $3. If I put, let's say I put 1,000 shares, spend about $800. If it gets up to $3, it's $3 grand. So it's a nice little profit. So keeping an eye on it. American Airlines, same thing here. This one, they're going to get bailed out at some point. So right now, between 28 and 14, they're probably, if they go back to normal, they can double their amount that double the amount that we're investing. All right, so one that I bought a while back, Norwegian Cruise Line. This one I think is going to take longer to get back just because I think people are going to be a little petrified of cruise ships for a while, except for the fact that you have people that are baby boomers and older, and they are going to flock back to this. So back right before the stock cratered, I was actually in Egypt at the time. It's trading around $50 a share. You can get it, well, a couple days ago, you can get it for 7. You can get up to 14, so that's rebounding. I bought it at 26. I'm still going to make my money back. I'm not sure what I want to do with this. So absent that, we're just going to hold off for now, but I do look at this every day. Dave & Buster's was one of the biggest winners in the stock market today. It went up 57%. So again, this is one that when people get a sense, like we talked about the end of social distancing, they're going to be flocking to places like this. So with that in mind, it started out right at the death day, about $46 a share, $47 a share. I bought it at 6. That is an 8 times return if it gets back to where I think it will get. But today alone, it went up 57%. It went up almost $6 a share. So I am enjoying that. Today's return, I made $355 total. It's almost $600, but definitely looking good. But again, I'm not really bragging about this. 57% of a small amount isn't that great. It's going to go through the roof later on. So those gains are going to dwarf these gains. All right, Eldorado Resorts, same thing. They went up really good today. They went up 44%. I got this at 8.25. It's sitting at 16.50. But again, if you look back on death day, it was almost at 70. So this one's got a long way to go. Today we made $370, total 503, but it's going to make a lot more than that. Cinemark, movie theater chain. My dad loves these ones. All right, death day, $32 a share. It's at $12.50 today, and let's see, today it actually went down a little bit, which is kind of crazy. But I got this at 6. I do anticipate this going back up to close to the amount that we saw before. So this one's going to be a really nice producer. So far, I've made $1,000 on this one. So, and made $34 today. So, but movie theaters are going to be huge because they're downstream of Hollywood. They're not going anywhere. I mean, I don't care what happens to their financials. When Hollywood puts out a movie, they don't have the ability to have a distribution network at home. And I was talking this about my wife. It's like, she was asking me why I thought that wouldn't happen. I said, well, if you go to the movie theaters, let's say there's 3 of us. How much is a movie ticket? She said $18. I'm like, that's 50, pardon my math, $54 total. I said, would you buy a movie that's right out, that just got released for $54 at home? And she said, no. I go, exactly. Plus, the theaters make a whole bunch of stuff. So, and plus, it's a big cultural part of who we are as a people. So, this one is a no-brainer. I don't understand how people aren't flocking to movie theater stocks. Boeing, this one drives me nuts. So, I bought this. I'll show you when I bought this. Where was this one? I've had this one for a while. Let's go back even 5 years. So this one was trading at about 440, and then what you see right here was when those 2 planes crashed, and it dropped the stock down to about 370. And so I actually bought that right around there. Let me see if we can get to, it shows my equity. Oh, you know what? I think I actually have this on my E-Trade one, which I'm still, the only reason I have my E-Trade one is because of Boeing, because of the stock price drop. But they kept going, this is basically up and down, or the bad news about the 737 MAXs. And it was sitting about 336, which is tolerable. And then death day hit. Boom. And it drops down to 134. So this one I just have an irrational dislike for. And over the last, let's say, month since all this happened, it's dropped $57. The things you hear in the news today are about Boeing's playing hardball with the federal government. They want a bailout. The federal government wants to give them a bailout, but the U.S. government wants to take an equity stake in the company, meaning they're going to take part ownership of the company, which is what they did with GM, 10 12 years ago or something to that effect. And Boeing's like, nope. You know what? If you don't give us the money, we'll just go. We have other things we can do. And I don't know if they mean bankruptcy. I don't know what they're meaning, if they have separate credit markets they're looking at, but they're going to be fine. When they're playing a game of chicken and hardball with the federal government, when the federal government's offering them bailout money, they're going to be good. So at some point, I'm going to need to put a limit order on this. So maybe I'll put it in for like 125. And if it gets back up to, let's say a year from now, let's pick a random low point 350, then I'm going to make roughly three times what I invested on that. So something I'm looking at. That one is evolving. It's a weird stock. Royal Caribbean, this one again is going to take people time to get back to, but this is probably the nicest cruise line of all of them. It was trading at about $111. You can get it for $35, so roughly about a 3-to-1 ratio. And so I don't know. I'm keeping an eye on that, but these are going to be the ones that are slow to come back. Although I think the baby boomers are going to be really itchy to get on board. But there is that sense of that trauma when you saw that they were on the news that they were floating infirmaries where they wouldn't let them off and they were locked in their room. I mean, that's definitely pretty traumatic. So we'll hold on to that and see what that does. JetBlue, again, just an airline, I think it's done really well. Today, actually, I don't hold any stock in this, but it went up 37%, which is really good. But 37% of not much isn't really much. It went up 250. So when you look up at the end, when all this started, they were trading at 20.75. They're now at 10.30. It's basically one half of it. They get back to normal. It's a 2-to-1 ratio. So they're going to get bailed out like everybody else. So this is free money. It's just I'm trying to put my money into things that have the highest leverage, and this one isn't there yet. But if you want lower risk tolerance, if I had lower risk tolerance, I always do that for the lawyers out there. If I had less risk tolerance and I didn't want to do anything more, I would probably have shares in JetBlue because you can get them for $10 a share. Spirit Airlines, the worst airline on the planet. I will never fly them. But they know how to make profitability, which sounds great if you're an investor. It's terrible if you are a passenger. They were trading about $40 a share. They're down at 14. That's a 3-to-1 ratio. In fact, most of the ones I was looking at today were at about a 3-to-1 ratio if they get back to their normal numbers. But trust me, these people are the chintziest people in the world, and they will be begging for bailout money. They're down 65% over the last 3 months. Most of that is from the last month, and it's free money for you. If I bought them, part of me just says I don't want to buy them just because I don't want to be a part of their organization because I just hate them. But the other part is if I do it, it's got to be a really low number. Like they get down to 8.94. I'd say they probably have to get down to like 7 or 6, just a premium for me tolerating owning them. All right, and I guess they think I'm in the East Coast because they went to nighttime mode, but I'm sitting here in California. It's the middle of the day. So Century Casinos, same thing. This one today, what did they do? Yeah, they went up 70%, but 70% of nothing is not really all that much. So if you had 1,000 shares of this, you'd have made $1,000. So we'll see what that does. But over the last, let's say, month, they've lost 65%. Their low point is right about here at 106. And I want to say that I have a limit order. So if it gets down to $1, I'm going to buy 600 shares. But again, it's a casino, so I don't really think they're going anywhere. They've been around for 30 years roughly. So I think I might even up that from 600. I might put 1,000 on it, but definitely casinos. It's free money for them and free money for you. Golden Entertainment, and they do development, finance, management, and ownership of casino properties. And yeah, founded in '98, headquartered in Las Vegas. In the last month, they've gone 67% down. Their low point was about right here at 381. I don't think I have a limit order on these. Nope. But if I did, I'd probably set it. I mean, they've come back to about 680. I'd probably set it lower, like maybe 4. But I'm going to see on this to see if we get kind of a dead cat bounce here. which is what they call it, just when it goes up for the sake of going up and then drops again, which I have a feeling it may happen. And lastly, Ryman Hospitality Properties. These people are the ones that, it's a real estate investment trust. I don't like it, but they do hotels as opposed to residential real estate. So it's a little bit different market, a little bit different risk portfolio. So it's not the same as the ones where if you don't pay your mortgage, they get screwed. So this one was trading at about $90 beforehand. You can get it for 32, almost 3 to 1. I just don't like the high stock price. If it were lower, I'd probably look into that. But overall, the last week, it's gone up, so that's a good sign. I'll keep an eye on it, but it's going to have to see a drop for me to get it. I just don't want like paying that much for one unit of stock. So that's where we're at today. One other thing is I actually moved money from a Bitcoin account into my stock portfolio today. So this number here is off by about $2,000. So realistically, if you're following this YouTube channel, this should be at about 10,400-ish. But today it's gone up about 16%, and it's gone up even after since we've been talking. I basically made about $1,800, an increase of 16%, which beats the market. So we'll talk tomorrow, see what tomorrow holds. I don't necessarily think tomorrow is going to be a big day on the positive end. I'm watching a lot of news. I just want to get a sense where people are at. I'm paying attention to the phase 3 of what they call the bailout, or that's where the people are actually, it's the legislation where they're actually mailing checks out to people. And I'm paying attention to the commercial real estate market, which I never pay attention to that, but that reverberates downhill and it affects a lot of other sectors. So pay attention to that. I'll see where you're at tomorrow, and we'll go from there. Oh, one more thing. Let's see. I just want to talk about stuff that I put limit orders in today. So today I put in, let's see, a fresh limit order. I put 2 fresh limit orders in today for Reading International, the movie theaters, at $2 per share at $250. And so if it gets there, great. If not, not the end of the world. And Azul Airlines, which is an airline out of South America, they went up 23% today, but they're really low. But what was in the news today was that the South American governments, quite a few of them came out and said, there's no bailout money. It's not happening. Don't even come asking for us. You're not getting anything. So you're on your own, which means that there's no lifeline for them. So I'm just curious to see what happens to them. That one right there, Azul, is sitting at 980. I put a limit order at 5 because I have a feeling this sucker might drop, and I will take it because it's a very profitable company. So anyway, tomorrow we'll see what happens. See ya.